I'm Deborah Borchardt, and this is your midday market update. Well, all the indices are in green territory now, starting to see a little bit of buying action going on, but this is a tale of two markets because the stocks that are doing well are the old school stocks, your DuPont, your Fords. The tech not doing that well today. Joining me now is Keith Bliss from Cuttone. So, Keith, Apple, we could debate that quarter for an hour. Lots of people debating whether it was good or not, but shareholders spoke and they did not like it. However, we're seeing old school names like U.S. Steel, doing well today.
Yeah, that's right. So you'll see that whenever one of the new school names like Apple may have missed on their earnings, you'll see the money start to rotate into those good old line, old industrial, old economy companies, particularly if they have a decent earnings report. DuPont's report was good for this quarter, but they're also signaling weakness for 2014. Ford had another good report, even though they still show weakness in Europe, which is an old story, we know, and it'll take them some time to get done with that. U.S. Steel is performing okay today, even though that company continues to bleed cash, but I think the market is very patient with them, that they're in a turnaround story right now. It'll take them several more quarters to get to, but you're right, we could debate the Apple quarter for a long time to come. It's quite amazing to me that Apple has had one of their best quarters ever, and just because they sold 51 million iPhones instead of 57 million iPhones, people took the stock down 15%, but that's the market we live in right now.
So is that, though, indicative also of maybe some concern about that investors have about this market right now, that maybe they'd prefer to be in an old school name?
Clearly, I mean, the market is certainly searching for direction right now. The run-up in 2013 was pretty broad-based, but it did get into those high-growth areas like technology. You saw the run in some of the stocks, particularly around the social media area, where it was a nice run for 2013. So investors are going to take a step back. Everybody that I speak to is expecting at least a sideways moving market. You've seen the volatility creep in the last 3 weeks. I mean, it's remarkable that the S&P 500 has lost 3.2% before today's trading in just a matter of 5 days. So we're going to see that kind of volatility. I think you're going to see people start to get a little bit more defensive inside of their portfolios. The old line industrial companies, the consumer non-cyclical companies, which are also rallying today based on the consumer confidence number a little bit in here. You should see money start to go in those in the next coming sessions as people get a little bit more defensive in their portfolios.
All right, well, there you have it. We are going to kick it old school down here at the stock exchange as the old guard is leading the way. The new guard not doing so much today, seems to be selling a little bit there. Keith Bliss from Cuttone, and I'm Deborah Borchardt with The Street.